Hello everybody, this is Matador from freetradingvideos.com. It's about 11:40 a.m. Eastern Standard Time. It's still Wednesday, July 8th, 2009. And I'm actually sitting here with one of my former mentoring students. We're sitting here together looking at the markets. Just took a walk. Pretty nice. So anyway, let's take apart the broad markets. S&P 500, again, nice thing to focus on as you're getting an idea about the relative strength and weakness of your other stocks. And you can already know, if you've been watching, markets have gapped up in the morning a little bit. Did an incomplete gap fill not once but twice, and actually held up as support at this level right here. So if I were to drop a line, that 88.30 mark was pretty significant. 88.70 we talked about in the chat room. If I scrunch this up, you can see a couple of hits here through the last few days. Ran right back up to that resistance instead of a complete gap fill, so that's X% more bearish than I would have liked. Ran up and actually touched that one or two times as a couple of tests at the 88.80 area. Say that 3 times fast. And it was just too much overhead resistance. Another 100% retracement plus another 2 tests, it looks like. And a lower swing high is not at all unexpected after that. Interesting. So I would have thought that we would have bounced better at 88 round number. Just this one little up bar, and now we've broken that. That has become resistance. Again, just talking through it. And now we're looking for the next swing high. And at least right now, if this holds, that'll be a fairly significantly lower swing high. You could even drop a retracement line through here. Let me do that again. So you can mark that. We were right about the 50-yard line. So you can remove all this noise. And there's the 50-yard line of that retracement. Not at all rare to see that for psychological reasons. And so we can leave that in there, go back, and look for the next level of support. You kind of have to go back quite some time to get it. You have to go to a daily almost. So here's the $88 mark that was so significant from a long time ago, actually. We had all this resistance. You can draw little circles around these areas like this and see how many times the areas were hit and touched, and now we've just broken that. So on the daily chart, I would call 85 as the next moving average support, which can be pretty significant. And it looks like we're heading down that way now. In between now and then, just to scrunch it up on a 60-minute chart, there's not a lot of previous support in here. So let's see where we go. But what I'll be doing right now in the next few days is marking the swing highs, seeing how significant volume tends to be acting here. We do have declining volume on the sell-off. And let's take apart the broad market internals. And you can see actually that even though we gapped up this morning, the broad market's internals gapped down, stayed below 1 for quite some time, and then made a nice support area right back up to a 1.5 area gap fill. And that actually matches beautifully with the trend Q, which is also around the 1.5 area. Typically they don't match that perfectly. That's good confirmation that there's some volume flowing into stocks on the down run. And the VIX also confirms that by a lot. That's a pretty good amount of volatility, some fear coming into the markets in this area. Alright, so that's what I see in the broad markets and the market internals. You could even take apart others if you wanted to. And again, if I was going to trade individual stocks today, I would do it in the context that we are looking a little bit bearish. So very good, and again, not all that surprising out of this head and shoulders pattern on the daily chart into a bunch of overhead resistance that you already know on a weekly chart. You see the big declining 50 MA and all the other things that we had talked about, $100 mark, 50% retracement again of this place where it really started selling off, right through here. Again, just remove the noise by dropping the 50. There you go. Pretty good significant resistance a few times. So what I'm looking for now on the weekly, longer term, is a higher swing low. And that'll be a great sentiment read for the market going forward. So very good. Thanks again for being a part of FTV. And look forward to D7's video after the close. Talk to everybody soon.